reduction in CPI. Prices are going to keep on rising as a result of all that spending. Now, while I'm on the topic of government spending, the debt ceiling again is in the news. And I was reading some quotes online from Janet Yellen, Secretary of the Treasury, talking about this. And you would think, right, if she's the Secretary of the Treasury, her job in theory should be to reassure all the bondholders that America is good for its debts, right? We're going to pay our debts. So don't worry, we will do what it takes to pay you, right? I'm the Secretary of the Treasury, and I'm going to make sure that we prioritize our bondholders. They're going to take priority because, that's the full faith and credit of the United States, right? We can't default on that. That would be horrific. So don't worry, about the debt ceiling. We will pay you. We will find a way. We will cut other spending. We'll do something, but we're going to pay. No, that's not what Janet Yellen is saying, right? Here's one quote from Janet Yellen. Quote, all I want to say is that it's Congress's job to do this, meaning raise the debt ceiling. If they fail to do it, we will have an economic and financial catastrophe that will be of our own making. And there is no action that President Biden, the U.S. Treasury, can take to prevent this catastrophe. And the catastrophe she is talking about is default on the debt, where the U.S. misses a debt payment. Now, if this is so catastrophic, why don't we just avoid it? Again, I've talked about how much tax revenue we have that's well in excess of the interest payments on the debt. Interest payments are something like what, $300-400 billion a year. We're collecting 10 times that in taxes, what, $4 trillion. So we got plenty of tax revenue to pay our debts. But we're not saying we're going to use that tax revenue to pay our debts. No. If we can't borrow more money to pay our debts, then we're not going to pay anything. Again, an admission of a Ponzi scheme. But this is the last thing that you should be saying. I mean, we got people worried about the dollar, worried about the weaponization of the dollar. And we're telling our creditors, you're the low man on the totem pole. It's not really that there's the full faith and credit, because if you own a treasury, the only way you're going to get paid is if we pay everybody else and there's still money left over. Otherwise, you're SOL, right? If we can't go deeper into debt, nobody is saying, right? I haven't heard Janet Yellen or anybody say, you know what, if the Republicans don't raise the debt ceiling, we can't send out the Social Security checks. No, it's all about the debt. The only people who are going to get screwed are the people who own U.S. treasuries. Does that make any sense? Is that what the Secretary of the Treasury should be out there saying? Now, one of the things they're trying to say is that, well, we're going to use the 14th Amendment or something like that to get around the debt ceiling, because they're saying that, that amendment says that that U.S. debt shall not be questioned. But that's irrelevant to whether or not we have the money to pay. It's not about questioning the legitimacy of the debt. I mean, no one's doing that. Yes, the debt is legitimate. We just don't have any money to pay it, right? So to say that, we have to pay the debt and therefore we can raise the debt ceiling. No, if they want to prioritize the debt, they can do it. In fact, what Congress should be doing right now, and what Biden should be leading the charge. Hey, where's the contingency plan? If we don't raise the debt ceiling, what government programs are we going to cut, right? So that we can pay interest on the national debt. What are we going to do, right? Because we have to do something. You can't just not raise the debt ceiling and not have a plan. So let's have a plan B. Okay, either we raise the debt ceiling, or here's all the government spending that we cut, right? And if we're going to default on the debt, well, let's lay it out. What's the haircut going to be? Who's going to, how much are we going to not pay? But then that is not something that we did to ourselves. We would have chosen to do that. If there is an interest payment that is missed on the national debt, it's because the government chose not to make the payment. They chose to prioritize something else, because somebody's going to get paid. It's not like no government checks are going to go out if they don't raise the debt ceiling. Checks are going to go out. They just have to figure out who gets paid. Like any business, you got to prioritize. Or if there's a company, that goes into bankruptcy and there's a trustee or whatever, and he's looking over, figuring out who gets the money, right? Well, if the government can't borrow anymore, right, it's technically kind of broke. So it's got to figure out who gets paid. But right now, they're saying that it's the bondholders who take the first hit, which means, U.S. Treasuries are junk bonds. If that's your, your collateral that you're last. See, normally bondholders are going to be higher up in a hierarchy of who gets paid, right? But now, no, they're low man on our totem pole. So why should anybody want to hold treasuries? I mean, you run the risk of inflation wiping out the value of the treasury. You run the risk of default. You run the risk of, having the U.S. weaponize the fact that you own treasuries against you and seize them for you. We've created so many reasons for holders of U.S. treasuries to want to get rid of them and, of course, get rid of the U.S. dollar. There's one more thing, too, that I want to mention that they're banning about the debt ceiling, and that's this $1 trillion, coin, this platinum coin they want to make, $1 trillion coin, and say, hey, we don't need to worry about borrowing money. We'll just mint $1 trillion coin and give it to the Fed, and the Fed will give the U.S. government $1 trillion to spend. And if we ever did something like that, it would really expose the banana republic that we're living in, because that would really be the government literally just printing the money, because the Fed would have no real asset on its books. I mean, right now, the Fed's balance sheet consists of U.S. Treasuries on the one hand, and then it issues currency, Federal Reserve notes. So the Federal Reserve notes are backed by a U.S. Treasury. But if the Fed will accept an ounce of platinum as collateral for $1 trillion, its balance sheet has a massive hole in it. What does it have on its balance sheet to stand behind $1 trillion? It doesn't have $1 trillion in U.S. Treasuries. It's got an ounce of platinum. What's that worth? Not even $2,000. How could the Federal Reserve, if it ever had to shrink its balance sheet, what asset would it have to buy back those treasuries? A 1 ounce platinum coin? Who's going to take that? Who's going to say, yeah, I'll sell you my $1 trillion worth of treasuries and I'll take an ounce of platinum in exchange? Who the hell's going to want that? Nobody. If the Federal Reserve ever did that, it would be impossible to shrink the balance sheet, because at least when they have U.S. Treasuries, somebody will take the treasuries because they pay interest, right? But who's going to take an ounce of platinum that pays no interest? And what are you going to do with it? You can't do. I mean, you got one coin that's worth $1 trillion. It's not like you could spend it. Where would you want to store that? It's basically what it would be like. It would be like a U.S. Treasury in perpetuity that paid zero, right? Because there's no interest on it, but you can't do anything with it but hold it indefinitely and collect no interest. It's really a worthless asset because the Fed can never do anything with it. So it would mean a permanent increase in the money supply. So it's permanent inflation, and the Fed has no ability to ever withdraw that liquidity unless the government decides that it wants its coin back. But why should it ever want it back? If it can just, mint $1 trillion coin and hand it to the Federal Reserve, why would it ever want it back, right? The Federal Reserve would be stuck with it. But this would expose, right, the whole fraud in this system, that it's just money printing. It's never going to stop. We're never going to get our fiscal house in order. Instead of all this talk about the fact that the U.S. lend money to the Japanese government for 10 years at 40 basis points when inflation is 330 basis points. Well, no, idiot. That's the problem. The only one that's dumb enough to buy those bonds is the Bank of Japan. But they know that if they take away the yield curve control, if they stop creating more inflation, then yields are going to spike, and that's going to force the Japanese government into a untenable predicament because they won't be able to make the payments on the debt. And there's going to have to be a massive day of reckoning in Japan. And so to avoid that political decision, the Bank of Japan is continuing to create more inflation, claiming that there's not enough. Now, at some point, the markets are going to stop believing the Bank of Japan. In fact, the Japanese yen fell about 1.25% on this announcement, but we haven't had a complete collapse yet of the Japanese yen. But as the markets start to see through this charade, it is going to put tremendous pressure on the Bank of Japan. But the reality is the United States is in even a worse predicament than is Japan because of our twin deficits. Japan still operates with a trade surplus, and Japan is still a creditor nation. The United States is the world's biggest debtor nation. We owe a fortune to Japan. The Japanese government holds over $1 trillion of U.S. treasuries. So one way the Japanese can try to alleviate their problem is by dumping those treasuries. They can sell those treasuries and then use the proceeds to pay down some of their own debt. We don't have that luxury. You know, we owe everybody. We're not a creditor like Japan, but the Bank of Japan is already trying to spare Japanese politicians from having to make these difficult choices that they would have to make if the Bank of Japan were to allow rates to rise. Well, the Fed is going to be in a similar predicament soon. Yes, the Fed has been able to raise rates. We got interest rates up to 5%, but we really can't move them much higher because we've already seen the adverse consequences in the banking sector. We've already seen the failure of 3 or 4 major banks. Many more banks would have also failed but for the government backstops. But if the Fed continues on this trajectory, the government might not be able to provide this support. And a lot of these banks that have, gotten a reprieve are going to fail. In fact, more negative news in the commercial real estate market. I was reading about more high-profile defaults on commercial real estate. Sterling of, Greenlight, I forget for the name of the company, that they operate all these, hotels, and they, just couldn't make their payments on a couple $100 million loan on a piece of property, with big warnings out there about the commercial real estate sector and all of this debt. I think it's like $500 million of debt coming due in the next year, several billion over the next few years. And there's not going to be any way to finance this because the value of the collateral has already collapsed. And again, I've been warning about that for years and years when so many people on Wall Street were looking forward to rising interest rates because they thought that rising interest rates would help the banks earn more money because they could charge higher rates. I was one of the few people pointing out the damage that higher rates was going to do to their balance sheets, to their assets, to the loans, the long-term loans that they had already committed to, all of the treasuries and mortgage-backed securities that were on their books. And so all of these chickens are coming home to roost right now. And this is putting a lot of pressure on the Fed. In fact, I was reading an article today on rents, and Moody's, has been tracking rents for about 20 years. And they're looking at, what the typical homeowner pays in interest on, or not in interest, in rent as a percentage of his income. And when they first started keeping track about 20 years ago, the average renter spent 23% of his income on rent. And 10 years ago, that was up to 26%. Today, it's now a record 30% of monthly income going to pay the rent. Now, this is also pre-tax income. So obviously, your after-tax income is diminished, but they're just looking at your pre-tax income, which is not really your take-home pay. But of your pre-tax income, people are spending 30% of that on their rent. Now, what does this mean? This means that people have less money left over for other things. Or if they're trying to save up a down payment to buy a home, well, they have less money available to do that if they're spending more on their rent. But that's not your only cost. If you're, renting an apartment is the rent, because you also have to pay utilities, and those rates have been going up. So there's other costs that a renter is going to have to pay that relate to renting a place, and all that stuff is going up. And this is evidence of a diminishing standard of living. That is why a lot more people have to take second and third jobs, because more of their income is going to rent. Now, 30% is the average. That means that there are some people who are actually paying a lot more than 30% of their income on rent. And that is a big number. But, I was reading this article too. It was more of an advertisement, really, disguised as an article from a company that's in the mortgage business. And they're trying to persuade people to buy homes because, of course, when you buy a home, you take out a mortgage. Now, I did read, too, that turnover in the housing market is now also at a record low, because there's a huge spread right now between what sellers want for their homes and what buyers can afford to pay. Because the sellers are still looking at prices from a year or two ago, but buyers can't afford those prices because mortgage rates are so much higher than they were a year or two ago. So there's a big disconnect between what sellers think their homes are worth and what buyers can actually afford to pay for those homes. So it's a huge spread. And so right now what's happening is just there's no transactions because the sellers don't want to come down. The buyers can't come up, right? So it's like a deadlock. And so you're seeing minimal turnover in houses. And again, another thing, and I pointed this out, was that a lot of people, one of the reasons they don't want to sell their homes is because they can't buy another one, because they can't port their mortgage. If you've got a 30-year fixed rate mortgage on a home, the only way you can keep that mortgage is to stay in your home. If you sell and try to buy a different home, well, you're going to have to get a brand new mortgage at a much, much higher rate. So that has really frozen a lot of people in their current homes. And that may be a reason too that people may even pay a mortgage if they're underwater, because what they're really trying to preserve is not their home, but their mortgage. That's their great asset, in that they've borrowed all this money on the cheap and they have, 25 years or how many years left to pay it back. But I know I got to take one more commercial break.
And again, as I started to say, and swallowed the medicine, as bad as it would have tasted, a healthy economy would have emerged instead of the bubble that we inflated instead of having a healthy economy. Donald Trump, again, was saying that before the 2008 financial crisis, before the coronavirus crisis, we had the strongest economy in the history of the world. That isn't even close to being true. The fact that Donald Trump is so clueless about the economy, and the fact that all of his advisors are so clueless about the economy, they're never going to know what to do. See, everybody wants us to go back to normal, the way things were before anybody heard the word coronavirus or COVID-19. Not even sure what to call it anymore. But you know what? We weren't normal back then. The economy was sick before the virus infected us. It was a bubble. There was nothing normal about that bubble. And the problem with bubbles is once they pop, they're not going to reflate. You need a new bubble. You need a bigger bubble. That's what the Fed did. They inflated the NASDAQ bubble. That popped. They inflated a bigger bubble in housing. That popped. And then they inflated a bubble in everything. Well, everything's already been in a bubble. There's nothing left to bubble up. It's over. Now, when I was talking about hyperinflation in 2008, everybody has been saying, oh, Peter Schiff was wrong. He said there'd be hyperinflation. Paul Krugman has even called me out. He was wrong. He said there would be hyperinflation. I wasn't wrong. I was right. There probably will be hyperinflation. I didn't say how quickly it would come. Yes, I'm a little surprised that they were able to kick the can down the road for over a decade. Yeah, But all that did is make the hyperinflation outcome that much more likely. And yes, all of the inflation that the Fed created with QE 1, 2, and 3, that went into financial assets. What do you think made the stock market go up? What do you think made the real estate market go up? That's all inflation. Everybody wanted to turn a blind eye to that inflation and deny it was there. Oh, it's just, asset prices. Those are prices. And they went up because of inflation, which is an expansion of the money supply. Let's get our terms straight. That's literally what inflation means. You find an old dictionary and it'll define inflation as an expansion in the supply of money and credit. Rising prices are an effect of inflation. They are a result. Inflation is what the Fed is doing right now. If you watched 60 Minutes last night, you saw Neil Kashkari for the Minneapolis Fed president. In his interview, he admitted that Congress has asked the Fed to literally print money as much as possible. And Kashkari said that the Fed is flooding the economy with liquidity, that it digitally creates out of thin air. It is electronically dropping money from helicopters by order of the U.S. Congress. And when he was asked, well, is there any limit to this? The answer was no. We will print an unlimited amount of money. And I take them at their word. But there is an end. They can't do it without end. It will end with the dollar's value coming to an end. It will end with hyperinflation. They will print money until the money they print has no value. So what good are all the bailouts going to be? What good are the checks that the government is going to be sending out for people not to work? And by the way, it is asinine for the government to try to keep businesses employing workers that they don't need. If you are a business and your customers are not there, you should lay people off. That is economic reality. Trying to encourage or subsidize businesses to maintain a workforce that, in the judgment of the business owner, he should reduce to ensure the solvency of the business, that is a mistake. A lot of people don't understand this because they don't understand history at all. They don't understand the Great Depression. But one of the biggest mistakes that Herbert Hoover made in 1929, just after the stock market crash, there was an asinine idea, although compared to the asinine ideas we have today, it was probably brilliant. But the idea back then was that businesses shouldn't cut wages, that it would be terrible if businesses reduced what they are paying their workers, because it would have a cascading effect throughout the economy. Workers would earn less, so they'd spend less, and it would just be a vicious cycle that we could never get out of. So economists of the day, a lot of them were saying, okay, Hoover, we can't let businesses cut wages. So all the big companies met with President Hoover, and they all promised Hoover, okay, we're not going to cut wages. We're going to keep everybody's wages where they are. The problem is everything was deflating. Prices were going down. Raw material costs were going down. The business was contracting. All of that meant wages were actually rising. The failure to cut wages when they needed to be cut meant that labor costs were too high. And so what did businesses do instead of cutting their wages? They cut their payrolls. They fired workers rather than lowering their pay. Had people lowered pay in the Depression, unemployment would have surged. And it was okay if people got less pay during the recession because their cost of living went way down. Food prices went down. Energy prices, the cost of living plunged during the Depression. So if your wages went down along with your prices, your standard of living didn't change. The problem is those idiots, the government, got together with business and decided not to cut wages. And so they fired people instead. Well, this is another example of governments doing the wrong thing. We don't want to pay businesses not to lay people off that should be laid off. That is malinvestment. It's a misallocation of labor resources. That labor needs to be freed up to do something productive, not stuck in a restaurant with no customers or stuck in a hotel with no customers. I mean, what's the point? And, the whole idea that, oh, well, everyone's going to be back to work in a couple of weeks, we don't know that. We have no idea. And in fact, now we've given businesses an incentive not to get people back to work if they even were going to do it. But you know what? Even if this virus is cured in a few weeks, right, or we think it is, do you think that business is just going to go right back to normal? Do you think that people are going to just go out in crowds right away and take a chance? I don't think so. I don't think business is going back to normal anytime soon in a lot of restaurants where the public, congregates. And unfortunately, 70% of the U.S. economy is this consumer spending borrowed money. So we have a lot of people in restaurants, a lot of people in bars, and a lot of people who are employed there. And Americans are just not going to go out as often for a little while. They're going to want to make sure the coast is clear. And also, a lot of employers, now that they've been mandated paid leave, not only medical leave, but family leave, they would be reluctant to hire people anyway. Because what if all of a sudden a few months later, here comes the virus, it's back. We got to lay everybody off again. And now you got to pay everybody's leave. You got to pay people to hang out with their kids who aren't in school. But look, all this is a mistake, right? This is going to destroy businesses. This is going to guarantee that the businesses that we bail out are going to be in more trouble in the future than they are today. And they're going to be in constant need of bailout. The same thing is going to happen with any of these big companies that we bail out. We're going to put so many strings on the bailouts that we guarantee they'll never be globally competitive again. We are destroying our industry, our economy with government. And I was right. We are going to have hyperinflation. Now, maybe we'll avoid it, but the only way we're going to avoid it, things are going to have to get really, really bad. We're going to have massive inflation, right? So hyperinflation, in my mind, is Zimbabwe, Weimar Republic, Venezuela, Argentina. That I think is where we're headed. Now, it's possible that we don't completely get there, but in order to avoid that, it's going to be horrific in this country. And if we don't avoid it, it will be worse than that. Anybody who thinks that what they're experiencing now, is kind of apocalyptic, this quarantine and social distancing. I agree. It is really surreal and bizarre. But it's nothing compared to the economic crisis that's coming. And a lot of people think that the economic crisis is coming because we're all shutting down the economy because we, want to contain the virus. No, that's just the tip of the iceberg. The real crisis is so much worse than that. This is a monetary crisis. This is a sovereign debt crisis. This economy is going to completely implode, and there's going to be nothing we can do about it. And the cause is not the coronavirus. The cause is the Federal Reserve. The cause is Congress. And it started back in 2008. Really, it started earlier than that with Alan Greenspan. It started probably after the 1987 stock market crash, and then continued with long-term capital management and Y2K and the Asian debt crisis, all the things that Greenspan did to temporarily delay the pay marks to the Allies whose property they destroyed in the war, war reparations. And the problem for the German economy is they really didn't have the resources to pay. So they did what we're doing now. They just printed money, right? They did what Jerome Powell says he's going to do without any limit, right? They dropped money from helicopters. But, I guess they literally. And so they kept printing marks and they ended up with hyperinflation. But remember, the hyperinflation was because they couldn't afford to service the debt. They had borrowed so much money that they couldn't tax the German people to repay it. And so the only way to get rid of the debt was to inflate it away. But in doing that, they really create economic havoc. And out of the ashes of that havoc rose the Nazi Party. But, once the debt was wiped out and they started anew and they no longer owed any reparations because the reparations were in their own currency, which they succeeded in destroying. When you destroy the currency, your plant and equipment is still there. I mean, you still have all the infrastructure. You just don't have any of the savings. But they worked quickly and they built up an arsenal and they were on top, strong enough to, almost win the Second World War. Again, without us, they probably would have won. Now, I'm glad we got into the Second World War. I wish we hadn't got into the First World War, because if we hadn't, there probably wouldn't have been a Second World War. But if there hadn't been a Second World War, there wouldn't have been me. We hadn't got in because maybe Hitler would have finished exterminating the Jews, and that's where all my ancestors came from. But the similarities between the Weimar Republic in America today is we're taking on a massive amount of debt. It's not being imposed on us by a treaty, by foreign powers. We're doing it to ourselves. I mean, nobody is even asking, how are we going to pay back the multiples of trillions, an open-ended QE infinity trillion dollar bailout? You know, trillion is the new billion now, right? That's all. Everything is by the trillions. And I joked that it's a good thing a lot of people in Washington don't know what comes after a trillion. Nobody better tell them. But before we get that far, we're going to kill the currency, because we can't tax our people to repay the debt any more than the Weimar Republic could have taxed their citizens. I mean, why is everybody broke? I talked about on my last podcast how during World War II, it was the American people who bailed out the government. And the government didn't need to be bailed out. The government was solvent. It just didn't have the resources to fight a world war. So it called upon the people to sacrifice and pitch in. The middle class had massive tax increases in 1942. The middle class ponied up and loaned the equivalent of trillions of dollars to the U.S. government from their savings that they had in the bank. They loaned it to the government that didn't have any money. And they stopped spending. They stopped going out to restaurants and bars and movie theaters and traveling. And they took the money that they would have spent there and they loaned that to the government too. And what the government did after the war is it paid back all the debt. All that money that was borrowed to fight World War II was paid back. How was it paid back? By the same taxes that they had raised going into the war. Because before World War II, hardly anybody paid income taxes. After World War II, everybody was paying. We paid the income tax to fight the war, and then we paid the income tax to pay off the debt that we incurred to fight the war because we couldn't raise taxes enough. Well, what are we doing now? Everybody in America is broke just about. So how is the government going to get money to fight the coronavirus? It can't get it from the public because the public doesn't have it. In fact, the public wants the government to fight the coronavirus and bail them out at the same time. Can you imagine if the U.S. government was called upon to do that in 1941, fight the Nazis and bail out the American economy, support the troops and everybody who stays at home, give everybody a check? The war would have been over before it got started. We can't fight this war. We're unarmed. If the people are broke, the government is broke. And in 1941, the government had no debt. I mean, the national debt was tiny. Now it's 24 trillion. I mean, we are loaded up with debt because we incurred all this debt before the crisis, right? I mean, if you not only don't save for a rainy day, but you borrow every day the sun is shining, what are you going to do when it rains? You are finished, right? This is a financial crisis. When all these people say, oh, it's not a financial crisis, of course it's a financial crisis. When you have as much debt as we do, any crisis becomes a financial crisis, right? It's true for individuals and it's true for countries, right? Some guy loses his job. So if he has a year's worth of savings in the bank, he doesn't have any debt. Oh, I lost my job. Oh, I'll go get another one. I got plenty of money to tide me over while I'm looking around, right? It's not a financial crisis. Oh, I have to get another job. That could be a problem. Shit, now I got to go find another job. I got to send out some resumes. This is going to, hit into my free time. That's life. Things like that happen. You got to find another job. Oh, well, it's not a crisis because you got plenty of savings. That's why you saved up, because you never know when you're going to lose your job. Well, if you don't have any savings, if you just say, screw it, I'm just going to live paycheck to paycheck. I'm not going to save anything, right? I'm just going to assume I always have this job. In fact, not only am I not going to save, I'm going to max out my credit cards. I'm going to take out a second mortgage on my house. I'm going to take out another new loan and buy a brand new car, right? Lose your job. Now it's a crisis. Now it's a financial crisis. Why is it a financial crisis? Because you lost your job? No. It's a financial crisis because you didn't prepare for the potential of losing your job because you borrowed so much money. So the reason the coronavirus is a financial crisis and not just a health crisis is because we weren't prepared for it, because we were broke, because we were loaded up with debt and we import everything. We don't have the capacity to produce the stuff that we need. All we have is a printing press to print money that no one's going to need. Anyway, let me go back to the questions. And don't forget, get your friends to watch this, listen to this, and if they can't do it live, have them go to my YouTube channel or Schiff Radio and listen to it. I think I got almost 200,000 views already on the live one I did last week, which is pretty good. I don't know how many listens I got on the podcast, So we got to spread this out. I need 1 million people to listen to this because I'm one guy. Think about how many people are out there in the media. Hold on. I got to tell everybody to stop texting me. Got the same problem that my thing keeps. Hold on. Stop texting now. So where was I? Oh yeah, I'm only one guy, right? I gotta drown out, right? I gotta compete with all these major networks out there that have a huge advertising budget, that have full-time reporters and studios and all kinds of fancy equipment, and they got billionaires from every company and every hedge fund talking their books. They all want the bailouts because that's their only chance, right? All these guys would have been bankrupted in 2008 by a financial crisis they had no idea was coming. And they conned Congress into bailing them out because they said, oh, this is what the nation needs. No, it's not. It's what they needed. They needed that bailout. That's why I went to Occupy Wall Street. That's why I tried to set the record straight on the problems with bailouts. And now those guys are going to get it again. They're out there on TV crying about how bad it's going to be if we don't have these massive bailouts. The bailouts save investors and speculators. They don't save the economy. They condemn the economy. Don't believe this nonsense that we're going to lose our industries if they go bankrupt. We won't lose anything. Our industries will be stronger if they're allowed to go bankrupt because new people will own them and operate them and do it right. If we keep them in business, they'll never be solvent. They'll be perpetual wards of the state. We're going to entrench the incompetent management that bankrupted them and double down on the incompetent monetary policy that made it all possible. No. We need bankruptcy. We need failure. We need a reset, right? Like game over and start over, except all the resources are there. If the airlines go bankrupt, we still own the planes. We still have the airports. We still have the hangars. We still have the pilots and the flight attendants. If the hotels go bankrupt, they don't blow up the hotels. Those big, beautiful hotels that cost a fortune, they're still here. We don't lose any of them. If the movie theaters go out of business, the theaters are still here. Somebody else is just going to own them. And you know what? They won't have all the debt. Getting rid of the debt is a good thing. But I'd rather get rid of debt in bankruptcy than obliterate it through hyperinflation. Hyperinflation is the worst way economically to get rid of debt. Let's do it the honest way, through default and bankruptcy. That's what we need. And then when you do that, not only is it better economically, but
of the Peter Schiff Show podcast, I'm going to be doing another live Q&A immediately following this podcast. Hard to say exactly how long the podcast is going to last, but pretty much as soon as I wrap this, I'm going to be taking your questions live at schiffradio.com premium. That is the locals channel that I have. You can sign up for it again on the Schiff Radio website, schiffradio.com premium. You can ask me questions. These Q&As seem to take an hour, hour and a half, so I keep going for a while. It really is an expansion on the podcast, but people ask a lot of questions that have nothing to do with the most recent podcast, and I do my best to answer them. Anyway, starting off today's podcast, I want to talk a little bit about the markets. I think the markets are setting up for a decline. The Dow down about 230 points today, and that's despite a 7 or 8% rise in Microsoft. That was the biggest mover in the Dow. It rose as a result of better than expected earnings. I think Meta's having a pretty good night, not nearly that good, but it had better than expected earnings. But despite that big jump in Microsoft, you had the decline in the Dow. The financials, again, are leading the way lower, which is not a healthy sign for the market or the economy, given that we are basically a credit-based bubble economy. Well, the banks that have been providing that credit are getting clobbered. The regional bank index hit a new 52-week low today, although it did manage to close positive, maybe about 0.5% or so. I wouldn't get excited about that. It's not any kind of significant reversal. The trend is clearly down for these regional banks. The index is now down about 40% off its highs. Also, significantly, you had Republic Bank, which is now kind of the epicenter of the crisis. That bank was down another 30% today, just one day, to a new 52-week low. And it was lower on the day. At one point, it was down maybe 40%. But so it closed down 30%. That's a 97% decline from its 52-week high. So, I mean, you've practically lost all your money, right? I mean, you only have another 3% to go. Of course, if you bought it here, if you buy the stock now and it loses that last 3%, meaning it goes to zero, you don't lose 3%, you lose 100%. That's why it's still very dangerous to buy, these stocks that have blown up. There's a reason this stock went from, 100 and whatever down to 4. Things are pretty bad when that happens, and it very easily could complete the journey down to zero. That's why I have been avoiding the banks, because I saw this train wreck coming from a mile away. And another example of the problem that the banks are in is their auto loans. And who do you think has been financing this car buying binge that went on in the United States for 10 years or so? I was watching George Gammon's podcast, and he brought this up and actually gave me the idea to talk about it. So I should credit George. And by the way, I'm going to plug his conference. I am going to be at his conference in Orlando. It's the weekend of April 12th. So I'm going to be down there. He's got some other really good speakers. Several of us are coming from Puerto Rico. My family's coming down because, they want to go to Disney World. My son, Spencer, is going to be there. So all you Bitcoin bugs can meet Spencer. He's not speaking at the conference, although maybe people can convince him to speak. He'll be there, though. I'm going to be there. I'll be talking. So I think there's still some time to sign up if you can go down there last minute to his conference at Rebel Capital. I forget the website where, you can Google it, you'll find it. But anyway, he was talking about these auto loans. And I've been talking about the auto loans for, 10 years, the bubble there, because when interest rates were at zero, anybody who could fog a mirror could buy a car, right? I mean, there was a lot of money going into the auto market, and that drove auto sales. People could get auto loans for nothing down, no payments, or all kinds of gimmicks. And even if you had really bad credit, right, you're a subprime borrower, low FICO score, you could still get a loan. Right? Nobody really cared. They charge you a little bit higher interest because, they want interest when interest rates are zero. Everybody is starved for yield, and so they'll take on a lot of risk in order to make these loans. These loans are now going bad, right, as interest rates rise. But one of the bigger problems, and nobody really talks about, I talked about it real time, is the duration of these auto loans. A lot of these loans were 5, 6, 7-year loans. When I was younger, if you bought a car and you had a loan, it was maybe a 3-year loan. You didn't know it had a 5, 6, 8-year auto loan. And so they were much shorter term, because the problem with cars is they lose so much value. You buy a new car, you drive it off the lot, it's down 20%, like the minute you leave the lot. Cars generally lose about half their value every 4 years. That's not excellent collateral on a loan, right? When you got a rapidly depreciating asset like a car. But another problem, in addition to these long maturities on these auto loans, what was happening during this car bubble, and I talked about it in real time. I'm not, Monday morning quarterback when it comes to these auto loans. But people would go in with a car that they owned where they were already underwater on their loan, meaning they owed, let's say, $30,000 and the car was only worth 20, right? So you got no equity in your existing car. How are you going to buy a new car? Well, what the car guys were doing is they were rolling that negative equity into the new loan. So they would allow you to take this upside down car and trade it in, and they would just carry that $10,000 deficit and stack it on top of this new loan. So now you're actually borrowing more than the car is worth. Let's say you traded in to a $50,000 car and you bought it with nothing down, and they took the $10,000 you owed on the last car and stuck it on the new loan. So now you're borrowing $60,000 to buy a $50,000 car, and the minute you drive it off the lot, it's worth $40,000. Well, you already owe 60. You're up down 20 grand. Well, as a lot of these loans start going into default, it's going to be huge losses for the lenders, right? And so who are the lenders? Well, a lot of them are banks, right? They've been lending out money. And these regional banks are in the most trouble because, as I said, they're seeing a withdrawal of cash. Customers are taking their money out because they don't want to take chances that if their bank fails, it doesn't get a special bailout because it's not politically connected enough or big enough. So people are yanking their money out to play it safe and to put it into these bigger banks. And they want to get interest. These regional banks can't pay enough interest. They can't even compete with the U.S. government interest on treasuries. So they're in a lot of trouble. Their loans are going bad. Their collateral is going down. These are horrible businesses. And the fact that they're falling, again, is a bad sign. So I think we are setting ourselves up for a drop in the stock market. I mean, we've been ignoring a lot of bad news. To me, it looks like we got a bit of a distribution top. You know, we had a rally. We've been kind of going sideways and we're rolling over. And I expect to see a break in the market. On the flip side, I think gold's going to go the other way. You know, gold closed below 2,000 today. I mean, still above 1990. They can't knock it down. The gold stocks are in a bit of a correction, and maybe the correction will get a little bit bigger. I mean, I bought a little bit more gold stocks myself. You know, I'm very selective now. So if some stocks have corrected a little bit more, I'll buy them. And I'm hoping that we actually get a bigger pullback. I just don't think we're going to get that big a pullback. I think we'll get one. And, you know, I'm always hoping that gold stocks go down. People are, you know, why do you want them to go down? You own them. Yeah, I want to buy more. I mean, I'm not even close to wanting to sell. See, the only time the price of the stock matters is when you buy and when you sell. Everything else is a bunch of noise, right? In the meantime, between the buy, I think the initial effect of a price decline to cushion the blow is going to be gone. In fact, that's what we're going to see in the next leg down, right? Because obviously we're going to have some kind of a bounce off the second quarter low. I mean, there's no question about it that we're going to get a bounce. It's not going to bounce us all the way back up to where we started, but it will take us off the lows. But then, of course, my expectation is that the economy rolls over and we take out the bottom of what people thought was going to be a V. It isn't even going to be a U. It's going to be a lopsided W, whatever, because the line is going to keep on falling. Because what's going to happen is a lot of employees who got called back to work, they're going to end up being refired because their bosses are going to realize that they didn't need the workers. And so you're going to have that relapse back into depression, right? The only thing we're going to recover to potentially is a normal recession, right? Because even if we have big growth, we're still going to be below where we started. So we're not going to get out of recession. It may look like we're out of depression until we're right back in there. And of course, then that's going to bring us to the election, because we're going to have the election right in the middle of potentially a fall relapse in November. But right now, the Democrats are really upping the ante on the stimulus. And I think it's going to make it harder and harder for the Republicans to stand in the way between the voters and all this free stuff that the Democrats are promising. In fact, you know, you've got people talking about how bad the economy is, right? This recession is so bad. And of course, it's nobody's fault, which makes it all the more reason why everybody needs a bailout, because the coronavirus, if it's anybody's fault, it's China's fault. It's not the fault of anybody here in America. So nobody should have to suffer something that wasn't their fault. So the government needs to give everybody money. And what they're saying is that the crisis is so bad, it doesn't matter how much it costs. It doesn't matter what we spend. We just have to keep passing government programs. We got to spend whatever it takes, right? We got to borrow as much as it takes. We can't be concerned about the deficit or the costs, because the most important thing is to just get us out of this horrible recession. And so we just need to spend as much as possible, whatever it takes to get out, and then we'll ask about the cost later. But one of the things that overlooks, the most important thing, is that government spending doesn't make the economy stronger. it actually makes the economy weaker. So to say the economy is really weak, so we need to spend as much money as possible to get us out of it, you're actually making the problem worse. That's what happens, because if government spends money, where are they getting the money to spend? Where are they getting those resources? They're getting them from the private sector. Whatever the government spends, the private sector can't spend. The only time government spending would improve the economy is if this money is spent in a way that increases productivity. So maybe if the money is spent to have a good judicial system that protects private property and therefore protects entrepreneurs and inventors, and and it makes it the market more efficient, or we cut down on crime, and so the market is more productive, or the government, generally on a local level uses government money efficiently. Maybe the roads run smoother, so we can have better traffic, or a better flow of cars and fewer accidents, and we can reduce commute time, or any other infrastructure that government can provide. Now, of course, you could argue that infrastructure could have been provided in the private sector. If the government didn't provide it, the private sector might have. And in most cases, that's the case. But at least the government is doing something with the money, even if it's not doing something as efficiently as the free market would. But when the government simply spends money, right, just takes money or just gives money to people like it's doing right now with the CARES Act, or with the PPP bailouts, the government's just handing out money. And so where's that coming from? Any spending that is going to result from that money is at the expense of other spending that can't take place because the money has lost value and prices have gone up, right? The government is not helping the economy. The government is hurting the economy. It's the spending that's the burden. It's the spending that amounts to the taxation. So the more the government spends, the more the government burdens the economy. And the weaker the economy is, the less capable it is of bearing that burden. And so we're basically kicking the economy when it's down, when we increase government spending during a recession. But apparently this recession is so bad that there's no limit to how much we should spend, which is why we'll never get out of it, why it's going to be a depression. But it is providing this mantra where, spare no expense, right? And in fact, you've got a number of Democrats that have already signed on to an enhanced version of the Andy Yang basic income plan. This plan, and there's, I think, a few versions of it, but they share a lot. Most of them have the key points the same. And that is that every adult, and an adult is 16 or older. So if you're 16 years old, you qualify. So every adult is going to get $2,000 a month for an undisclosed or indefinite time period, just whenever we decide that the crisis is over or the unemployment rate is back to normal. So, but there's no actual sunset, right? It's until somebody in government decides that it's time to take away the $2,000 a month. Now, of course, once you give somebody $2,000 a month, politically, it's very hard to take it away, right? And in fact, if you have a vested interest in perpetuating the crisis, if that's the only way to keep the $2,000 a month checks coming. But think about a 16-year-old getting $2,000 a month. I mean, why? I mean, most 16-year-olds are still living with their parents. Why do they need $2,000 a month? They don't have any rent to pay. They don't have any credit card debt yet. They don't have any student loans yet. They're not even out of high school. I mean, why are you going to start lavishing $2,000 a month on 16 and 17-year-olds? That doesn't make any sense. I mean, maybe if they're emancipated and they're living, on their own, but no, it doesn't, make any consideration. In fact, it doesn't even matter whether you're working or not working. You get the money whether you're employed or unemployed. Doesn't matter. The only limitation on who gets the money is how much you're already earning, right? So they don't want to give the $2,000 a month to people who are earning $150,000 a year. But if you're only earning $75,000 a year, then they're going to give you the money, right? And so there is no criteria. Everybody gets it. I mean, what's the rationale? If I didn't lose my job because of COVID-19, then what's the basis for giving me even more money? Doesn't make any sense, right? The people who didn't lose their jobs, as prices have come down, to the extent that they have come down, you're in better shape. And certainly, housing prices are coming down. If you were thinking about buying a house and you still want to do that, they're cheaper, right? You can pay less money. So if you didn't lose your job, I mean, maybe you even got a raise. Maybe you work for a company that is actually really busy during this time period, and you actually got a raise. You're actually making more money than you were before COVID-19. Why should you get $2,000 a month? I mean, it makes no sense. Of course, why should anybody get money for nothing, right? Nobody should get it. But then it gets more and more absurd as you start rewarding people who are actually better off today than they were before COVID-19 came around, right? But the Democrats are really pushing this, and the Republicans so far are pushing back and say, no, this is ridiculous. But I don't think they really have the moral ground for this fight, since they've already conceded so much of it in what they've already passed in the CARES Act and the PPP and the bailouts and everything they're doing. You've already kind of acknowledged that we need government stimulus. We need to get government money into the economy. So what better way to put it into the economy than through the hands of ordinary Americans? I mean, you're so in favor of bailing out the big banks, bailing out Fortune 500 companies. Why do you regret average Americans having this money? And then they start turning into a racial issue because, you're denying people in the inner cities who are disproportionately impacted, minorities, disproportionately, being hurt by the coronavirus. So they turn it into all sorts of things. In fact, I think COVID-19 is really the best thing to ever happen to socialists. I think it's better than climate change, right? They love climate change, right? Because climate change let them create this boogeyman that the government needs to save us from. And all these new big government programs, these Green New Deal programs, they're all couched in that language of we got to save the environment, we got to save the planet, right, from climate change. But really, it's a distraction. It's trying to give a benevolent purpose to what they want to do, which is increase the size of government, have lessen individual liberty and freedom, and have a stronger central government that they control. And so when they can claim that, we need all this government because otherwise, we're all going to die from climate change, that provides the motivation, because otherwise people wouldn't agree to it, right? People who oppose the socialist program, if you don't have the climate change aspect of it, they're not going to go along with it. But once you tie it to climate change, say, hey, this is necessary to save the planet, right? The government is going to save us from this menace, this threat. But the only way we can do it is if we, pass this agenda. You'll get people to support that agenda who, absent the threat of the climate change, wouldn't have done it. So the leftists, the socialists, are able to use and
want to buy something from a vending machine. That's the problem. Hi, Peter. I live in Brazil. I own gold and silver. I'm patiently waiting to invest in a Brazil fund, such as small caps. Yeah, Brazil stocks have been killed. We own one Brazil stock right now in our portfolios. We used to own 3. We got rid of 2 of them a while ago, years ago, but we still have one. In retrospect, we should have sold that one too, because we could buy it back cheaper now. But no, I think there's some opportunities. I mean, Brazil is not my favorite country. They have, it's certainly not even close in South America, but there's some good value down there. I mean, see, the difference is the U.S. stocks have gone down a lot, but they're still expensive. And they're going to get a lot more expensive after these bailouts and stimulus and all this draconian socialist legislation that's coming. But, I think there's a lot of bargains in the emerging markets. I think there's some really good cheap assets there with good dividends. And yeah, we're taking advantage of that. I mean, those are going to be good investments, I think, and they're going to be great inflation hedges when the emerging market currencies really start to soar, and it's the dollar that ends up submerging. Here's a guy from San Juan, Alan R., $20. It looks like the panic margin selling in gold is done. Do you think metals have bottomed? Most likely they have bottomed. Yes, I do. As I said, I didn't expect the correction to get much more than 10% when it started. This is a much more shallow correction. We had a 30% decline during the 2008 financial crisis, like an official bear market, before we went up to 1900. I think this is much more shallow. I think the next stop after we go through 2000 is probably somewhere between 5,000 and 10,000, but that's not going to be the end. See, I used to have a $5,000 target for gold back in 2008. People made fun of me because we only got to 2000. But you remember, I had a $1,000 target when it was under 300, and we hit that. But Peter, you said $5,000 goal. It didn't happen. Yeah, it's going to happen now, except now we're going to be looking down at 5,000 instead of up at it. Because since we've printed and created so much money since I made that call, we're actually going to probably go much higher than 5,000. That call wasn't bullish enough. The difference is it's taking longer than I thought, but now we're going to get even higher than I thought. I wasn't wrong. I was early. It's the people who said it wasn't going to happen. They were wrong. They were wrong early, and they're wrong now, and they've probably always been wrong. An apple is $1 and gold is 1,500. 1 ounce of gold buys 1,500 apples. Money supply doubles. Apples are $2 and gold is 3,000. Gold has capital gains. Yes, exactly. That's the problem. If everything doubles, you don't actually have a capital gain in gold. Your purchasing power hasn't changed. And so if you sell and the government says, oh, you've doubled your money, we want half of that in taxes, you're actually poorer than you start. Now, are you as poor as the guy who didn't have gold and only had money in paper? No, because he lost a lot more than you did. But what if the capital gains tax goes to 90%? Then you're barely better off. Now, the key is, I think if apples double, the gold price might triple. And so the price of apples may actually go down in terms of gold, but not as much as the capital gains is going to hit you. That's why you need to be someplace without a capital gains. Or if you're transacting in physical coins, which is what I'm suggesting that you do at Schiff Gold, buy some physical coins. If you go out and use your physical coins to buy an apple, the guy who sold you the apple and got your coin isn't going to tell anybody that you gave him a silver coin for his apples. And so if you don't tell anybody, nobody will know, right? What do I think about anarcho-capitalism? What do you think a government should do about the coronavirus? Look, I'm not an anarchist. That's anarcho-capitalism is anarchy. I don't believe in anarchy. I believe in limited government. I'm very much on the same page as the founders. I mean, I think anarchy would be great if it could exist, but I think it's like a vacuum. I think when there's no government, some government is created, to fill the void. And so rather than waiting for a bad government to come into existence on its own, let's set one up with a lot of strings. Let's set up a limited government with a constitution now so that we know what we have before something worse just comes into existence. The problem is, you can set up a great government like our founders did, but over time, the government finds a way to unbind itself from those chains. And you lose the freedom. That's why everyone said, well, 200 years maybe will last, because they know what happens. But yeah, so anarchy would be good if it could last, but I just don't think it can, which is why I want to set up a limited government, which is hard to keep. That's the problem with government. Once you set it up, it's hard to keep a limit on its power, right? It's like that camel's nose under the tent. Kindly elaborate on the economic implications for the real crash in Europe. Look, there's a lot of problems in Europe, particularly in, some of the countries, Italy, Spain, Greece, Portugal, coronavirus making it even worse. And now the countries that are normally creditors like Germany, now it needs to borrow. Everybody can't borrow. Somebody has to lend, right? It was okay when Germany and Japan and China were lending, other nations could borrow. But when they're borrowing too, we all can't borrow, right? Somebody's got to be on the other side of that transaction, right? Everybody can't be a buyer. Somebody has to be a seller, right? It takes two to tango. And so we all can't have a one-sided tango. It's just not going to work. So look, there's a day of reckoning coming in Europe and Japan, all over the world. People should own gold everywhere. People should own real assets everywhere. But I just think the day of reckoning will be particularly harsh in America. We have benefited the most from the fiat monetary system, and we will lose the most when it comes crashing down. Our economy is the most screwed up as far as the least percent of our economy being manufacturing, the most percent being services, the largest trade deficits, the largest budget deficits as a percentage of the real goods producing portion of our economy. Our government has guaranteed more debts and more liabilities than anybody else. And so, we're just set up for a bigger fall. We've had a bigger ride on the way up. It's going to be a bigger crash on the way down. That's why I think it's particularly important for Americans, but it's also important for everybody. So no matter where you live in the world, I think you will benefit from implementing my investment strategy long term. But it's not about short-term trading. If you believe that I'm right, that the music's going to stop playing, right, and there's going to be a big day of reckoning, and you want a portfolio that will do the best when that day comes, then that's what I'm doing. I'm buying the companies that I think will hold up the best. You got to have something. You got to, if I'm right and cash is trash, it will be, then what are you going to own instead of the trash? That's what I'm doing. I'm your garbage man to get rid of your trash. Well, people don't know it's trash. And let's get some real stuff. So if you're anywhere in the world, go to our website at europacificfunds.com and contact us. Your thoughts on fractional reserve banking. If we go back to the gold standard, what we have, Pat, look, fractional reserve banking, we had that under the gold standard. Banks loan money out. That's how come they can pay interest. That's the whole idea behind a bank. They're not going to keep all the money just in a vault. They're making loans. So there's always going to be some kind of fractional reserve. But in a free market with gold money, banks compete with one another for safety, and no bank wants a run. And so the way to make sure that you don't have a run is you don't loan out, make too many loans, but you also don't loan out demand deposits. See, there's a big difference between a demand deposit, at least there used to be. There's not anymore. The whole banking system is screwed up thanks to the Fed. But when we had honest money and honest banking, you had demand deposits and you had time deposits. People didn't loan out demand deposits because they were available on demand, and they didn't pay interest because if they're not loaning out your money, how are they going to pay you interest? In fact, they charged you to hold your demand deposit because the bank wasn't making any money if it wasn't using your money. So it charged you for storing it. It charged you for having a checking account. You paid every month. You paid per check. That was a service that people were paying for. People don't pay for that service anymore because the bank takes your demand deposit and loans it out. Well, how are they going to loan it out if it's supposedly they're on demand? That creates a completely unstable banking system. Now, if you had a time deposit, let's say you went to the bank and you said, yeah, I'm going to lock this money up for 5 years. I'm not going to come get it for 5 years. Now the bank is like, whoa, you're tying the money up for 5 years? I got 5 years to make loans. I can loan it to some entrepreneur who needs some new equipment for his business. I can loan it to this farmer, right, who, to get him through to harvest, right? I got time on the money. So now the bank can make a loan and maybe charge the farmer, 8% for the loan. But because he's charging the farmer 8%, he can pay you 3% for your money. And why does he have to pay you? Because there's another bank that can make loans and he wants your deposits. So everybody is competing by offering higher loans, but they can't offer too high an interest because they need a profit margin. And even on a time deposit, you're not going to loan out all your time deposits because you know what happens? Somebody tells you, here's my money. I don't want it for 5 years. And they buy a CD. And then an emergency comes up and they go to the bank and they say, I need my money back now, right? Now, sometimes there's a small penalty if you break a CD early, but it's not that big a deal. But what no bank wants to do is tell somebody that comes to their bank because they need their CD early and says, I lost my job. I actually need the money now. I can't wait 5 years. Nobody wants to hear their bank say, I'm sorry, but we loaned it out. Come back in 4 years and you can have it. Everybody's going to want their money out of that bank. So people still didn't loan out. They still had their reserves, but it was the free market that dictated how much reserves you would keep in order to maintain your reputation and integrity. Because as a bank, the worst thing that can happen is people don't trust your bank, and now there's a run on your institution. So it's the value of reputation in a free market that keeps banks safe. And without government guarantees, banks, they shop around for safe banks. They don't want to put money in a bank that's reckless, that's making reckless loans, that doesn't have a lot of reserves, because that's their life savings. They don't want to risk losing it. The system we have today is completely nuts. The government corrupted it, right? All the deposits are guaranteed. So the minute the bank gets your money, they do all kinds of stupid things with it. It's all gone. And nobody cares because the government's guaranteed everything, right? And when it all comes crashing down, they blame capitalism. Oh, look at these banks. Look at all these crazy, stupid things they did. Of course, because the government made them do it. The government guaranteed all the loans. The government has deposit insurance. The government is going to bail them out if they fail. It's moral hazard, squared now. So we have the most unsound tanking yet. And that's a short-term phenomenon because of this global rush for liquidity in dollars, because all this new money that the Fed is creating, a lot of it has just been committed. It hasn't actually gone into circulation yet. But once this short-term liquidity squeeze around the world ends, the dollar is going to sink like a stone. It is going to collapse. The only thing that hides how fast it's falling is that other fiat currencies are falling too, because central bankers all around the world are making the same idiotic mistakes we are. Governments all around the world are making the same idiotic mistakes our government is making. We are leading the idiot parade, and they are following us. But the difference is other economies are much sounder, right? They're the producers. They're the creditors. They don't have a complete house of cards, phony economy like we do, and they do not issue the world reserve currency. No country is going to suffer more than the United States when the current fiat monetary system comes crashing down, because we enjoy a privileged place in that system as the issuer of the reserve currency, which is a ticket to live beyond our means, to consume without producing, to borrow without saving. That's all going to come to an end. And then we're going to find out what the real problem is. The real problem isn't that consumers aren't spending. The problem is they have nothing to buy. The stimulus that has already been offered by Trump, this new stimulus package equals like 10% of GDP. 10%, we're just getting started. During the Great Depression, for the entirety, between 1929 and 1941, just before World War II started, the entire Keynesian fiscal stimulus was only about 3% of GDP. That's it. Government spending increased by about 9% of GDP, and taxes increased by about 6%. And so the difference was 3%. That was the stimulus. That was it in the Depression. And ironically, it was the stimulus that helped create the Depression. We didn't need stimulus. We didn't need more government. We needed to be relieved with less government. Had they cut government spending instead of increased it, there would not have been a depression. That's the irony. That's what happened in 1920. 1920 got started worse than the Great Depression. The problem was it was over so quickly, they never had a chance to pass the stimulus. That's what happened. It was really, really bad, but Congress didn't get around to doing anything. And as a result, the economy healed itself. The reason we had a Great Depression in 1929 is because we weren't that lucky. Hoover came in with his idiot bailouts and stimulus, whatever they did, and turned that downturn into a Great Depression. Well, the idiots we have today, and again, the guys back then were geniuses compared to these morons. What they are going to do is they're going to turn what could have been a very severe recession into something much worse than a depression, into a inflationary depression. So as I said, you got to buy your gold, Schiff Gold. I know the guys are there somewhere answering the calls. Gold and silver, that's real money. Buy it now. I know you're going to wait 2 or 3 months to get your silver. Well, if you wait much longer to buy it, you might be waiting 6 months, a year. We may run out. Who knows what's going to happen with gold and silver? Just buy yours while you can. For investments, if you got bigger portfolios, you got to get out of all U.S. treasuries, muni bonds, corporate bonds, anything that's a promise to pay you dollars. Because the only thing that's going to buy less than the dollar today than the dollar in the future. And the further in the future it is, the less it's going to buy. So get rid of them. The Fed is giving you a get out of jail free card. The Fed is buying all the bonds. Sell them yours. Don't be the last one to unload their bonds on the Fed, because the longer you wait, the less purchasing power you're going to get. And you want to get into foreign assets. That's why I've been saying it's not about the market going down. It's about the dollar collapsing. Because in order to save the market and the phony economy, they sacrifice the dollar. Well, they're going to get a lot more than they bargained for. It's not like the dollar is just going to get a little beat up. It's going to get completely slaughtered. And so you got to do something. You got to move your portfolios out of dollar-denominated stuff, out of U.S. stocks too. Even though U.S. stocks, the ones that don't go bankrupt, won't lose as much as bonds. But I think U.S. stocks are going to be so taken over by socialists in Washington. There's going to be so much worker-friendly regulation that basically effectively nationalizes the major American corporations. They're going to be run as worker cooperatives. Like no one's going to give a damn about the shareholder. So before the shareholders figure out that they're the patsies, sell your U.S. stocks. you need to be aware of this political risk, because the worse the economy gets, the greater the political risk, right? The more of our individual liberties are going to be lost as people are scrambling for somebody to help them, not knowing that the reason they need help is because of all the government help in the past. That wasn't help at all. The government causes all the crisis and then comes riding to the rescue, right? They're the firemen that light the fires. And then they say, oh, look, we're here to put it out. Yes, we'll stop lighting them. So you got to get out of your U.S. assets. Talk to my brokers at Euro Pacific Capital. Transfer an account over, IRAs, retirement, regular accounts, so that we can manage the money outside the U.S. Yes, I know other countries are screwing up their currencies. There's going to be inflation all over the world. The difference is there won't be hyperinflation all over the world. There will probably in the United States. The other countries aren't going to lose their reserve currency status because they don't have it to lose. Other countries are already producing more than they consume. They're already saving more than they borrow. They are viable. It's America that's in for a rude awakening. We have a date with destiny and an awakening coming, but you don't want to be there for that awakening. You don't want to keep that date personally. I mean, as Americans, we're going to have to deal with it, but I'd rather deal with it as a solvent American than as a broke American, because the vast majority of Americans are going to be wiped out by this. They're not going to be wiped out by the coronavirus, but by the government's cure for the coronavirus that started long before anybody ever thought up the word coronavirus, right? We started this decades ago, and Alan Greenspan may have started it, but Jerome Powell is going to finish it, most likely, unless somebody else gets appointed by Biden who's different, and then that person maybe will be the fall guy or gal. We'll see. But this is not, there's not another 10, 12 years. That's not going to happen. Don't think there's any way that that's going to happen. We have now accelerated the time scale. Think about where you were a month ago, right? Did you think any of this nonsense was possible? Had you ever seen anything like this outside of a science fiction movie? No. Well, as I said, you ain't seen nothing yet. It's going to get a whole lot worse. And before it does, at least get prepared financially, and then maybe try to get prepared emotionally. Anyway, let me try to take some questions. I know there's a bunch of questions. I got to turn. Is there a password to this other computer? Yeah. Because it's better not to have them, because it just makes it harder to get in. All right. So I'm going to start taking the questions. I guess I take them in order of the dollar value. This is a $150 question. And pretty soon, $150 will be what you pay for a carton of eggs, if you're lucky. And then the question is, well, how long will it be before that same carton of eggs costs $300? And then how long before there is no carton of eggs? And if you want a carton of eggs, you got to find the farmer, and you got to give him some silver. Otherwise, he's not giving you his eggs. Anyway, let me see this question. It says, is Euro Pacific Capital compliant with AAOIFI standards? Accounting, auditing, financial institution is worth doing. The floodgates of mud. I don't know. I mean, I'm not familiar with every single rule, but we're compliant with everything that we're required. I'm not the compliance officer. And Euro Pacific Capital right now is a division. I sold the BD. The new owners renamed it Alliance Global Partners. And yeah, I mean, they got a chief compliance officer. We got all kinds of guys that make sure we comply with all of the FINRA rules, all the SEC rules. Most of these rules, I think, are counterproductive and simply run up the costs unnecessarily by design, as a mechanism to keep out competition for the major broker dealers. That's how all regulation works. Government regulates small business to make it harder for small businesses to get started and make it harder for those who are in business to stay in business. All of it is about protecting the larger corporations that basically buy the politicians with their campaign donations. Anyway, next up is Adam, who is a huge fan. Please discuss economic rise of Germany despite World War I reparations and the Great Depression of using debt. Well, Germany, I mean, the big problem with Germany is Weimar Republic and hyperinflation. And that's where you can go and see the examples of money being carried around in wheelbarrows. And there's a famous story about somebody who left a wheelbarrow full of Reichsmarks on the sidewalk and went into a store. And when they came back out, their money was on the ground and the wheelbarrow had been stolen. Right? That just shows you how quickly money can lose value. And you know what happened to Germany is after the war, the Treaty of Versailles was extremely harsh on Germany. And that was probably a byproduct of the United States having entered the war. And we fought with, the UK and our allies and really crushed the Germans. I think without the U.S. entry into the war, they probably would have negotiated a peace and it would have been more balanced. And therefore, Germany would not have gone through the hyperinflation, which gave rise to Adolf Hitler and World War II and concentration camps. And so you never know what's going to happen, when you knock over the first domino, which is why it's always good not to get involved in foreign wars, because you never know how much greater a problem you might be creating than the one that you think you're solving. But in any event, what happened to Germany is they had agreed to a lot of war reparations. The Germans agreed to pay